A lot of the folks that I see that have done very well with real estate and have this philosophy of don't wait to buy real estate and wait and have really benefited from this kind of stuff, it seems more tangible to them. And when I talk to folks that are newer at this, they're like, well, that's great for your dad who bought in 2011, but what about the next 20? That's great that Jacksonville's been doing this for 15 years, but what about the next 20 years? And that kind of like begs the question of today's show. It's like, yeah, cool. Once we've captured all this demand and all this stuff is happening, how do you generate demand inside a market? Like, how do you actually get a city to attract more people so that there's more folks that want the houses that drive that thing up is what we're going to talk about.
Yes, we are. Shall we go there now?
Shall we go there? You ready, Paul?
We should and we shall. Shall we will. Whatever.
We should and we shall. All right, GC. I think first, before we talk about how you did it, let's just talk about why you did it. Like this research that you've done on downtown.
Yeah. So I'm kind of the reverse engineering type. If I know an outcome that I want to create, I look back and I say, well, how can I influence? What actions can I take? What can I do on behalf of my clients to make sure that they are at that outcome? And so again, if we follow along here and we understand that the greatest contributor to your wealth in real estate will come from home price appreciation over a full market cycle. If we know that's the biggest driver, what is the biggest lever I can pull so that I can create more home price appreciation in a market? Is that even possible as an individual investor, as a company? Is it possible to actually influence home price appreciation? And for most investors, the answer is no. For most companies, the answer is no. But JWB is different. We've been here. We put our flag here in Jacksonville 18 years ago when we started. And we said that we wanted to go a mile deeper here than going a mile wider and going elsewhere. And we put all of our efforts, our team is here, and we're going to be here for the long haul. And so as we knew that factor, and then we also knew that home price appreciation is the biggest driver for our clients long-term, we said, what can we do that other companies might not have the ability to do? And we said, well, what can we do? Well, so then I went to the data. So let's fire up the data a little bit because I'll walk you through what the data shows. So we know all of that. Well, let's look at what the data shows. I put some data up here that's showing revitalized downtown cities and what their home price appreciation has been over the last 10 years compared to the US overall. And what we have seen is that revitalized downtown cities appreciated 27% more than the US overall in the last 10 years. So think of cities like Denver, Austin, Nashville, Tampa. If you look there, you've seen over 0.25% more home price appreciation. And what does that mean for you as an investor? When you see this type of additional home price appreciation, it equates into hundreds of thousands of dollars of additional dollars in your pockets over a period of time. It might be 5 years, 10 years, 15 years, but we're talking about hundreds of thousands of dollars of additional return on one property. So think about an average JWB client might buy 3 properties or 5 properties or get to maybe 10 or 15 in their portfolio over time. We're talking about $1 million impacts that we can have for our clients if we could be that company that can move downtown forward and become a revitalized downtown like Denver, like Austin, Nashville, Tampa.
Got it. Charles C. Baldwin is asking, where are you pulling this data from? What's the primary source?
Yeah, so we pay consultants for this data. So our consulting firm is John Burns Real Estate Consulting. So that's where all this data comes from.
All right. So let's talk about downtown Jacksonville, you see?
So then I'm saying, okay, well, we can rally all of our efforts for downtown. We can actually be a part of this revitalization. We can be a pioneer. We can push it forward. We know the outcome. We know what will happen if we can drive home price appreciation. Well, the good thing is that we're not starting from scratch. So if you actually look at leading indicators for what the next downtown to pop off might be, you would look at a couple of leading indicators. One might be, how much are the residents of downtown actually growing even before we get involved? How much of that downtown growth? Because for a downtown to become thriving and to become revitalized, you have to have more people living downtown. And to be quite honest, Jacksonville has 1.6 million people. It wasn't that long ago that we only had, call it 3,500, 4,000, 5,000 people living downtown. I mean, that is insane that you don't have more than that in a city that has 1.6 million people. So it has been this untapped resource. But what we're seeing here is that even before the early pioneers of downtown revitalization, because there's many more than just JWB, we're a part of it, even before we all got involved, we already saw downtown populations growing. Just in the last 5 years, we've seen downtown populations grow. In 2017, we started at 4,800 residents. And now in 2024, we're going to be over 10,000 residents. And that 10,000 number is really significant because not only do we focus on what we can do in Jacksonville here, but we're very connected with leadership councils here in Jacksonville. We go and we see other successful downtowns and we follow the model of how they became revitalized. So we've been to Denver, Austin, Tampa, Nashville. We've seen there. And what you find out is that once your resident population in downtown reaches a tipping point, and that number is 10,000 residents, you start to see more bars, more restaurants, more grocery stores, more amenities, and you create this flywheel effect. So 10,000 is actually a very significant number, and we're there in 2024 here in Jacksonville.
I remember the first time that we had, when we first started the show in 2020, was it Daniel Davis? He came up and he threw out that number, right?
That's right.
He was the head of the Chamber of Commerce, and he was like, it's really huge that we get to this $10,000 number, because at 10,000 resident number,
There you go.
because at 10,000 residents inside of an urban core, it tips. And the reason why it tips is because at 10,000 residents, now developers, retailers, and everybody else that funds the development of downtown, they no longer need extra incentive. They see a certain density, and now whoever wants to develop a mixed-use residential building can count on calling up Whole Foods and them wanting some to be a cornerstone tenant in that development, calling up a movie theater and they want to like pop in. All these services that require that density now foot the bill for the developers to develop once you reach that number. And I remember talking to him about how we're at 6,100, and that's been such a high growth from like 4,800 just a couple of years ago, and we were there forever. And now seeing this thing really starting to accelerate to like beyond 7,000 and having this horizon of 10,000 in the next 12 months, to me is really exciting after being on that conversation.
Absolutely.
Yeah.
So you think about residents already growing. That means there's already demand for living downtown, even before all these developers are getting here. Well, that's wonderful. But then let's think about the dollars that are actually being used to develop. And this was the moment, hopefully this is a moment for you where it's like, okay, now I see what is going on here. And it'll be really fun for you to see a lot of these actual developments when you come to the summit. But let's look at the dollars that are actually being developed. So in Jacksonville, you can see all the way back from 2017 through 2022, which is the last data we have available, our numbers of development dollars have gone up significantly. That's $4 billion of investment activity that's in active construction in downtown Jacksonville right now.
The dirt is moving. This is not a rendering.
That's right. The dirt is moving, right? Downtown Jacksonville is 3.9 square miles. So you got $4 billion of stuff going on here. And this is not just like proposed activity. This is the dirt is moving. The buildings are actually being renovated, or new buildings are going up. That's why this is such an exciting time to come and see what's going on here. But $4 billion. And just to put that in perspective, I look at other downtowns. I haven't found another downtown that has $4 billion of activity going on. I was in Washington, D.C. not too long ago, our nation's capital, a wonderful, thriving downtown. They have $1 billion of activity going on, a super successful downtown. Yeah. So $4 billion, of course, that's the most in Jacksonville history. And you're seeing that for years now, that number has significantly increased. And that's why there's more housing units now for people to be living downtown. And that's why, of course, our population has been growing even before our impact here.
Okay. All right. What's interesting to me, GC, is the fact that you can identify all this data all you want, and you can be in a great city all you want. But unless the downtown hasn't already reached that critical capacity, what I'm getting from that $1 billion in DC is that you need to be in a place that it hasn't already happened yet. Yes. In order to like benefit from this tipping point kind of thing.
Yes.
And that is what's come together. It's the idea that it hasn't happened yet, and it's on the way there, that we find ourselves in this moment where we know we're in a before and that there's going to be an after. Like, it's easy to like know of a before and after moment in the rears, but right now with this data, with you guys being so boots on the ground, and with a couple of projects that we're going to showcase that are already happening right now, we know that we're in the before. We're presently in the before. So now that allows us, as not the average investor, to capitalize on the opportunity of seeing into the future.
100%. And 10 years ago, when we were talking about downtown Jacksonville, it was a tougher thing for people to see the vision and see when it could happen. There's a lot of variables along the way. It's much easier now when you see the building, when you see what's actually happened. You see completed buildings. You see residents living in completed buildings that those buildings were vacant for 30 years before that happened. So it's a much easier thing for people to visualize now. But what people don't realize is when this pops, when this happens, it happens really quickly. And home prices go up in the neighborhoods surrounding downtown, and rents go up in the neighborhoods surrounding downtown very quickly. If you look at those cities like we talked about, Nashville. For anybody who's in the audience right now, lives in Nashville or is a frequent visitor of Nashville, talk about what rents and home prices were like around downtown Nashville 10 years ago versus what they are now, or 5 years ago, or 2 years ago. It happens really quickly. And that's because once you hit this tipping point, a lot of developer dollars start coming in. A lot more developer dollars start coming in, and it becomes this flywheel effect. So there is an urgency to be at this special moment, which you have right now, where you don't have to be a visionary to see what's going on, but you are in early enough before it really starts to, that flywheel effect starts to happen. So that's the moment that we're in right now.
Yeah, I kind of equate it to like buying Apple stock right when they released the iPod.
Yeah.
Right. Like the iPhone hasn't come out yet. The iPad hasn't come out yet. Right. It's not yet $1 trillion company.
That's good.
But you see the launch of the first thing and it's happening. But what we are essentially predicting here is that we're going to follow suit. Like, would we like to follow suit of Nashville? And this is the data you came up with.
Yeah. So part of this is I want people to see that where Nashville was back in the day is not so different than where we were back in the day.
Yeah.
Nashville just got their stuff together. Public-private partnerships started to happen. Incentives for developers downtown started to happen in Nashville and in Denver and in Tampa. And over the course of, a few years, 5 years, you've seen significant growth, but it's not like this unrealized, this dream that can never be realized. So let's go back and look at the data. So as of 2013 in downtown Nashville, you had 4,658 people living. In downtown Nashville, you had 3,800. We were about at the same level. Now, since then, Nashville popped. All of these things that I'm talking about happening in Jacksonville right now happened in Nashville, call it 10 years ago, right? Now there's 17,000 people living in downtown Nashville, and Jacksonville as of 2023, we're at about 7,700. So growth from where we were, but we haven't popped yet. But you can see the model for how to do it has already been out there when you look at other successful downtowns.
Got it. Paul, you got anything in Nashville, man?
I wish I did. Like most people on the call are probably saying, I wish I did. And what I love about this, just to add my quick color commentary, we talk about it. I steal it from Andy Tanner. Don't you wish you were able to predict the future, right? Don't we all wish we could predict the future? Well, we can. This is how we do it. It's supply and demand economics, and it's taking the time to look at the data and see where the data concludes. Where does it leave you? And the data doesn't lie, and that's what's cool. This isn't like you said, Greg, this isn't pie in the sky. This isn't visionary talk. Let's just look at the data. Let's look at the numbers, and let's draw logical conclusions that are factual of where this is going. And this is how you predict the future, which is really cool.
I thought you'd never ask. Why don't we look at the numbers and see where this is going?
So this is great. So then let's look at what actually happened in Nashville. And I broke it down from 1982 to 2012 versus the last 10 years, because that's when it really popped. So if you look at home price appreciation in Nashville compared to the US, it was largely the same. It was 3.8% in Nashville for those 30 years, and it was 3.5% for the US overall. There was nothing that was significant there. But look what's happened since 2013 to 2022, right? The spread, right? 25%-ish more home price appreciation in Nashville than the national average has happened over the last 10 years. And the change agent, the path of progress has been that revitalized downtown for Nashville. We talk about the path of progress. Many people have maybe heard that before. They're thinking of the next supermarket or shopping center to go in next to their home. None of that, all of that pales in comparison to investing in single-family rental properties surrounding a downtown that is about to go off. That dwarfs every other supermarket, shopping center, all of that. So if you're looking for the path of progress, if you can find that next downtown, that next Nashville, that's where you want to hold these beautiful single-family rental properties.
Yeah, and again, I've skipped a couple slides here, but we have a bunch of data here of all these other cities that we all wish we could have invested in 10 years ago. Like Austin has done a very similar thing. They've had greater home price appreciation with similar kind of like numbers. That's Nashville. And now what we're seeing in downtown Jacksonville is very parallel to these like growth numbers that are happening in an urban core. And we're talking about the urban core specifically because there's a not your average guest saying, I'm in Huntsville, Alabama, development going up everywhere really fast. What's your view? I'm not sure exactly what's happening in Huntsville, Alabama, but not all development is the same. Like multifamily units going up around all over the city is very different than a clustered urban core that is dense, that has mixed use, and that will attract the generation of like talent that Fortune 500 companies need to hire from. And that's what we're seeing happening.
It's generational in Jacksonville. What is going on in downtown Jacksonville is once in a generation. That's why we're so excited about it. I can't speak to Huntsville and to many other cities right now, but this is not just that next complex that's going up or that next shopping center. This is going to change how Jacksonville is as a downtown, as a region for decades and decades. That's what we're on the precipice of.
Got it.